Hi, I'm Victor. I'm an active value investor, and I like sharing my investing journey as I invest in a portfolio of stocks, bonds, and other assets to beat the S&P index. I'd like to cover VICI, which is a real estate investment trust that focuses on investing in experiential properties. A lot of their properties are in Las Vegas, where people love to travel and enjoy themselves, do a little gambling, watch a show, and have a great time. This company's been doing really well over the last 3 years. I've owned the company for 3 years, and they just announced their earnings. Gave me an opportunity to reevaluate the company, and I'd like to share that with you. I like to follow a process in my investments, and for REITs, I have a scorecard dedicated to this type of company. I first want to know, do I want to be in this industry? Is the company operating and performing well? Is the dividend they're paying sustainable? And I want a discount on the stock. Based on those questions, I decide whether I should buy more shares, hold my shares, or sell my position in this stock. VICI announced their earnings, and they had a lot of good things to share. First, they've collected 100% of their rents. That's always great to see because their business is to rent the properties to Caesars, as an example, and Caesars paid 100% of their rent as well as the rest of their tenants. Their total revenues increased 72%, which is phenomenal growth. Now, I would also say that they have also diluted shares because they issued out far more shares in order to buy additional properties. In fact, they had significant acquisitions. They bought Mandalay Bay from BlackRock, so it's going to be another property in their portfolio. And they acquired another casino here, Fitz Casino and Hotel, Waterview Casino and Hotel. So they're acquiring these new properties, which is good, but they're diluting shares, which is not always the great thing. In this case here, I like that they're growing and they are diluting shares. It is acceptable because, as you'll see later, the ratios still favor the investor, and I like seeing the company grow. The company's income statement looks good. Total revenues really have grown, and it's because they acquired these new casinos. Their expenses look in line. There's one line, which is the change in allowance for credit losses. That one there, they had an anomaly year in 2021 where it was basically negative. And this year they are putting an allowance for credit losses, which is appropriate since they are leasing out space to many companies, and those leases, some of them may go bad, so they have to have an allowance. VICI has been one of my winners over the last 3 years, specifically over 2022. Here, this graph, the green line shows where VICI stock has been going, the total return, which is measured by the appreciation in the stock and the dividend they pay. And you can see the consistent rise over the last 4 years. It actually has beat both the S&P, which is the yellow line, and the REIT index, which is the blue line, especially in 2022. VICI really stood tall, principally because they made really good investments, and travel is enjoying a very good rebound. If you remember back when COVID hit, nobody was traveling. The airlines were, pretty much idle. Hotels were empty. And Las Vegas, was also rather unoccupied. Now, once we got past COVID, people are really anxious to go out and travel and maybe catch up on some travel that they couldn't do over the last, couple of years. So Las Vegas, as well as a lot of the VICI properties, have been enjoying a boom in that time. And that's why 2022 returns were excellent, is that these guys were in the right type of real estate that was enjoying a great rebound. You measure a dividend company by how well they grow their annual dividend, and VICI has been doing a great job. Just consistent growth in their dividend year over year, 16% growth in their dividend. Looking at the payout ratio for their dividend, if you look at their trailing available funds from operations, they're paying out 81% AFFO. But if you look at their guidance 2023 in the AFFO that they're guiding, they'll be paying out 74%, which is normal for REITs. They have to pay out a majority of their AFFO. That's one of the rules for REITs. So I think their dividend is safe. For REITs, I use the dividend and discount that dividend based on the discount rate I want to go with and minus the growth rate that I expect in the company. And the formula is spelled out here. Now, for this company, I'm going to use a discount rate that is going to be conservative, 9%. They are in the travel or pegged to a travel Las Vegas market. So 9%, I would say, is nice and conservative. It's a well-run company, so I could have easily gone to 8%, but I'm going to go with 9%. And I'm going to go with a growth rate of 5%. As mentioned, they grew just really dynamically in 2022, but I wanted to go with a nice conservative growth rate. And if they exceed that, wonderful. If we look at those two variables and put them into this formula, I get a value per share of $39. Now, the share price currently is $34. Therefore, there's a discount available, 14% on VICI. Keep in mind, the stock has been consistently going up over the last 3 years, which is great to see. VICI's performance was really good in 2022. They outperformed the S&P index, so great job, VICI team. They did dilute their shares, which is always, catches attention of any investor, but there is good reasons for it. They invested all those proceeds into additional properties, making this REIT one of the biggest REITs in the country, and they operate at very profitable rates. So I guess it's a good reason to dilute shares. Their dividend is a healthy 4.6%, and that's with a stock that has been appreciating in value. In 2023, I expect more of the same, consistent growth, profit, and free cash flow. I believe that travel will continue to enjoy growth in 2023. I think there's still a lot of pent-up demand for people to get out, go out with loved ones, with friends, and enjoy themselves, because 2020, 2021 were years where travel was pretty much in a deep recession. This will continue to be a high dividend payer, and I expect that they'll continue to grow their dividend year after year. My outlook is I like this REIT because it's the one investment that I have in Las Vegas. It's the one that really looks at experiential markets, hotels, experiences, that type of thing. And the dividend will remain high. So it's a good income stock for me. So that's scorecard VICI. It's an industry that I want to be a part of. The company, I would argue, this is one of the best run REITs in the country. The dividend is sustainable, and there's a small discount available. Therefore, I'm going to be buying on dips and adding to my good size position in VICI. Hey, thank you for watching the video. I hope you found it interesting, discovered something new about VICI. Again, I'm sharing my investing journey with you. VICI is part of my portfolio, and I try to beat the S&P every year and make a great return for my family. I'm not a financial advisor, therefore I'm not recommending you buy any particular stock or bond or investment. Good luck investing in 2023.